Oftentimes we'll find people who decide it's either time to downsize or time to move into a larger house. They move, but they keep their prior home and start to rent it out. Well, it's very important if you do this that you notify your insurance company, because before, when you were living there, it was insured as a homeowner policy, or what the insurance industry might refer to as an HO3 or an HO5 policy. But now it needs to be a rental policy. It's a landlord type policy. And oftentimes people will come to us and ask us to insure their things, and we'll find this where they have rental homes that are insured as owner-occupied homes. Some of the differences are on an owner-occupied home, you have additional living expenses. Meaning if the house burns down, the insurance company would pay you out to live somewhere else while it's getting rebuilt. A landlord policy has loss of rent. So if your property that you're renting out has a claim and you can't have tenants there, now the insurance company could pay out the lost rent to you, which is very important to landlords because they want to keep that cash flow coming in even if the house isn't there anymore. Other things would be premise liability as opposed to personal liability. So as a landlord, you need liability on the property in case, one of the tenants gets hurt and you were negligent and caused that accident, or one of their guests gets hurt and they come after you. It's important to have premise liability. The other thing is sometimes landlord coverage could even be less expensive than homeowner coverage because usually landlords aren't furnishing the house. So now you can reduce the amount of personal property pretty significantly, maybe just to cover the fridge, the stove, and the washer and dryer maybe. So you could lower that amount of personal property pretty significantly and save some money.